Hey everyone, this is DayTraderRockStar, and this is the educational video of all educational videos. It's my simple tip to make money in the markets. Now, the money in the markets is a broad term. You could apply it to anything, or a simple tip to make money is a broad term. I didn't really add into the make in the markets or trading stocks, but basically the rules that apply here you could put it onto anything. And as long as your probabilities, and just like anything else, if you're a scientific or a mathematical or believe in the scientific approach, this is going to make a lot of sense to you. If you believe everything is random, then again, you're on your own then, you really are. So right now this is giving us the edge, and this edge plays out each and every day, when we trade the markets. And if you could, you see what I trade, you'll see that the edge works more than it doesn't. Absolutely. By far I have a 70% win-loss ratio on picking good stocks to trade versus bad stocks to trade. And I would actually say that a good percentage of the losing trades are based because I fall outside of my own rules. I hold into earnings. I hold on too long. I have those human flaws, which I am well aware of. And I tried to, discuss on the radio. I said, yeah, I have the greed too. I have the hope and the greed and everything else that comes along with being a trader. And we try to change that, And what I've done is, developed a methodology that kind of keeps me in that box and kind of keeps me away from those emotions and that randomness of being just me as a human being. The fear, the greed, and everything else that goes along with money. So it's important to recognize the opportunities in the market, but it's even more important to trust in them and use them to make money, and then have the discipline to take the money off the table. Right there is a video in itself. Right there we could explain one of the biggest problems with traders out there is not recognizing the trade as it's showing up. It's believing something different. That's what's being shown to you, and what's being shown to you is the evidence on the chart. And the evidence on the chart is just like a map. And that maybe this has a lot to do with me being a youngster, and I was really big into map reading and drawing my own maps and hiking and stuff. And I just loved even drawing the profile of mountains and the lines. I don't even remember. I'm trying to remember what I used to do, but I remember I used to do this when I was a kid. Cartography. And I made a profile of mountain stuff, and it was very interesting. It's very simple to see that mountain and how things work in nature. So again, trend lines are very important. One of the things we want to talk about right now is how to recognize when a channel is about to be broken to the upside. All right, and now there's so many different ways, and there's so many different videos I could talk about. And the first video I'll talk about is the 1-2-3 pattern. If you look that up, Day Trading Radio, the 1-2-3 pattern, or Day Trader Rockstar, you'll find out how to recognize a pattern or a channel. And once you recognize that channel, so you only need 2 points to really get a trend. It's here and here, and then you realize your trend is actually pointing down. If your X was here and your X was here, that charts go to the right side, so your trend is up, and it's very simple. Any other point on this represents the third point, and because that third point is, and you have 3 points, you could actually make a parallel line here just by taking the distance from here to here and make it. So now you have your trade, and this usually represents a trade. So you come back down here, now your next trade right here. So you can see how that's playing out on this chart right here. You have different trend lines, you have different pivot areas, and pivot areas are where markets move from up to down or down to up, and that's where you connect your trend lines. And each pattern, each daily chart, each longer term chart can be broken down into a smaller time frame, and that smaller time frame works the same rules, and it's just about using the indicators on the smaller time frame. You could do this all the way down to a 1-minute chart, all the way up to a weekly chart. All right, so we like to deal with the daily charts and the 60-minute charts. This is what we call a coiled stochastic. This gives me additional proof. Whenever you have a wedge pattern typically breaks out in that 65 to 75% zone. So that's on a wedge video altogether. That's another video. But, do a downward wedge, DayTraderRockStar. But it also works well with the stochastics. Anything that wedges out like this. This is a natural thing. It's a coiled pattern. It's almost like you look at the bottom of a shell, the Fibonacci curl there, where a shell curls all the way into it. And it's just a tightening of the pattern. And that happens a lot in nature. It happens a lot in stocks. So when you recognize that, you can actually recognize when the market's going to actually make a bigger move, more powerful move, because that's where all the pressure is leading up to. So that's one of the stocks. Safeway is one of the stocks that we kind of traded off of. So we break that down to the 60-minute chart. And when we get to the 60-minute chart, we recognize, yeah, we do have a recognizable underlying trend by connecting these pivot areas. So that green line. So what happens is, as the channel develops, and you could actually see the stochastics here, which is the main indicator I use, because it's a good buying and selling pressure, oversold and overbought levels. There's a whole other video on stochastics, but just take it for what it is right now. Oversold levels and overbought levels, 80-20. That's what basics what we're using here, because we're using this in conjunction with other indicators underneath. So once we establish that there's two lines make a trend, we want to trade that third line, and when those stochastics are setting up, we want to trade that. Now, and again, also paying attention to the short-term channel. All right, you could trade this anytime you want, but just remember, this is overbought, this is oversold. Once you get back into an overbought level here, there's a better chance of a pullback. So it's important to recognize your areas, and you might get in at $16 here, and it might go up to $17. It might go up to $16.90, and you're looking at $17, and you're like, oh, I gotta wait for $17, but it's telling me it's oversold, but I need that $17. Next morning it gaps down, and you're kicking yourself in the head. All right. So it's important to listen to the signals, not hope, not do anything else. Remember, gaps are so important in charts. Gaps are super important. That's the next video I need to do. I don't think I haven't done a video on gaps really, other than the 5 to 7 day pullback. But a gap resist in their area adds to be an indicator, along with this adds to be an indicator. All right. Recognizable pattern, yes. So multiple indicators telling us to sell, and you need to sell it there. Even if you have 90 cents, you're hoping for $1. All right. The next setup, lower trend line. Yes, we're oversold. Move up here, and this is the key here. This is where it all comes together. We talk about recognizing when a channel is going to break out. So whenever you have that underlying trend line and you keep on bouncing off that trend line, as that extends out, you're making a series of lower lows and lower lows on the stochastics. So lower lows here, low, a low, a low. Each time the stochastics get oversold, we have a lower low. Oversold, lower low. Oversold, lower low. Oversold, lower low. Oversold. Wait a second. That's not lower. That's not a lower low. So the key here is that we start to see a divergence between the price and the stochastics. So we have the divergence here, and this is what we call divergence. Instead of seeing the continuation of the pattern, there's something here that changes, a slight something, but something that we can recognize. And once you recognize that, that's the key there. You have to take advantage of that. You can take advantage of each of these situations, but this is even more powerful because that's a better chance of an overall channel breakout. So now we look at the daily chart. Even though we're in the channel here, we did have this double bottom here, and I would say there's a good chance that this pattern is going to break out to the upside. And that's why when this happened before, you could what's great about this setup right now, it hasn't broken out, and you could actually go back into this. You could be watching this video 6 months from now, next year in 2013, and you can look back at this and see how it worked out. Other than a black swan event or some kind of crazy news, I bet you that this breaks out through that channel line. All right, so that's important to recognize that. That was Safeway, and this is the stocks that I actually trade live on the radio. It's a little plug for my show, but you all know that. That's why you subscribe to this station. But this is what is the key. That's why you see the green. It's because we recognize the double bottom. I'd be able to put that out to you. We trade that stock. We know where to get in. We know where to get out. And now we're back into a situation. And again, for those people who have seen this video within the next week or so, you have an opportunity here. Dollar Tree is set up. I'm going to show you some other setups right now. Dollar Tree is back into an oversold level, but again, what's the divergence here? I told you the divergence right here was a double bottom versus a lower low. Now we have a higher low. So all of a sudden we have a change. We have something that's building here. We have an oversold stochastic and a higher low. The chances of a breakout here are a move back up, an eventual move up. What happens is you already have two pivot areas. You have a gap which represents really a new change of a chart. And what happened? And if this matches with this, which I even checked. Oh, look at that. You know, this low basically, let me push this over here. You know, I'm just doing, sometimes I just bring up these, I see these things as I'm making these videos. And it's great because it shows that, you know, this stuff really just lines up perfectly. I don't even know what's underneath that, but I'm going to put it to the closing prices. Basically, it's close enough to a perfect channel. So all of a sudden, this adds up because we have a 1, 2, 3 pattern. It all comes down to the 1, 2, 3 pattern, double bottom setup here. All right, Dollar Tree, and again, thing you got to remember: this works in normal markets. You know, we are in a situation where there is a tremendous media coverage of world events. You know, every day we hang on the edge of our seats to see if a country needs a bailout or something else. And, you know, all the commentary that comes out and all the different talking heads that come out. And it's just, you know, the majority of it is just all BS. The truth is, you know, there's a very obvious, you know, connection here from this point to 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 this point. You know, it's a very obvious connection, or else it would be looking something totally different. But the reason these things add up is because machines are picking these up. You know, traders are picking up. This is a self-fulfilling prophecy. And once you're able to identify it, there's nothing that's going to work better than it. That's one thing I love to say about this, you know. I said, I'm not trying to sell you some snakeskin oil here. This is obviously is going to continue to work, you know. And doing something other than this, you won't be doing the best you can, period. You know, even if you refer back to it, you know, the HPS setups, even if you refer back to it. I mean, one thing as a trader I learned a long time ago, you know, one of my first videos, you probably remember it. It's me, and I want to go back to those videos too, but it was me throwing these books away because after a while of trading, you realize that everyone's just rehashing the same old crap, you know. But they don't realize the inner core of the market, you know, the inner, how things really work. I mean, can you fit this in a book and constantly sell it over and over? They have to make up their fluff now. Everyone has to make up some fluff to try to sell something. Where it's as obvious as going up, you know, going outside and looking at a cloud or a line or something in nature that where there's a structure to it. And there's a structure to the markets right now. And you have to recognize that because that's what logical machines, and I'm saying machines because we all know that the machines are here. The algorithms, the computers, you know, they're picking up these levels. It's very obvious. But if you want to continue to, you know, not just depend on this and try to make up some golden, you know, holy grail of trading, go right ahead. You know, spend your $700 a month for the people who can give you that holy grail. All right. Well, I'm getting carried away now. I had so much more to go over, and I become so passionate about this. You know, that's okay. All right. Let me throw you some other stocks here. PBR. I went over this PBR with my with the listeners of the radio show. I haven't even talked about the radio show, but DayTradingRadio.com, and we trade these each and every day. I get on the air around 9 o'clock, 8:30. I'm there about 8 o'clock. I try to get on around 8:30, and we broadcast the markets all day, and I show you these setups, and I trade them, and everything's good. And we have what a tremendous chat room. Every day I think about it and I watch it, and I find myself, you know, I actually give a shout out to everyone in the chat room because you've made my life so good. You know, I've never seen such a group of traders that work such together, and there's no egos or anything like that, and everyone just works together, and it makes me proud. It honestly makes me proud. It might sound goofy on this video. You might be hearing this for the first time. You won't know what the hell I'm talking about, but for those out there who know what I'm talking about, it's a special thing, and I appreciate that, and I thank you guys for that. PBR. Again, another situation where once you identify something special coming into it, that's the time. Here's another example. PBR is actually inverted head and shoulders. One loves to do the inverted head and shoulder pattern. Inverted head and shoulders pattern is kind of a bottoming pattern. You make a lower low and a lower low, but then you make a higher low. You have a neckline, which you keep on breaking above, and then you have the breakthrough. But look at this. It's very similar to that pattern. We recently got the breakout of this. Now, we talk about buying the first pullback of a breakout, and I don't know if you could actually consider this one. I have to go back. I won't be able to go back on my 60-minute chart back in January, but I would bet you that 60-minute chart right here would give us an oversold level on the 60, and that move would probably give us probably a dollar move up to here before we got overbought. But again, it doesn't mean that it's going to continue to run. It's about the first trade. It's about, this market is not a buy and hold market. Unless you get stuck in it and you feel like, all right, you're going to get your money back. It is definitely not your grandmother's market where they bought AT&T stock and you'd hold it. This is this day and age right now, and I tell you this for all the new traders out there who might be listening to this. This day and age, you have a disadvantage. You have multiple disadvantages. All right, not to kind of like scare you away from this, but just to let you know, because that's probably the best thing that could happen to you, is just realize that it's not, anything can happen in the markets, upgrades, downgrades, media coverage, earnings and stuff like that. So you have to be in and out. You have to be in and out of the market, and you have to play the market for what it is. Most of the stocks over the last 2 years have gone nowhere, believe it or not. I looked at, during the watch list, I look at some stocks, and I go out 2 years, and you see the price basically at the same level it was 2 years ago. Most of them. Here, I'm going out right now, just randomly. I'm just going randomly out here. Last 2 years. This is on Verifone. $34. This is August. That's last August. It was at $34. And last August it was at $23. All right, so it was a little lower to $23. But basically, if we could get into a market that goes straight up, yeah, I believe let's get into the good stock, load up, continue to load up, cost average in, get your dividends, reinvest those, and just continue to ride the wave. But now look at the Verifone now. I mean, you've been, it's slowly giving you not as big as rallies, but what it is giving you is opportunities on a shorter time frame. And this is a stock that we've constantly trade. And once you recognize, first of all, here's your first trend line break. And we're not going to go back to June, but I can guarantee you that we saw the divergence here on the daily. Now we start to see the flags. We trade each flag. Each flag represents a daily chart. On the daily chart on the flag, it represents really nice. It doesn't show us any really setups here, but on a 60-minute chart, those flags really come into play. And that trend line comes into play. Connect the trend lines, trade the trend lines, and trade the stochastics. Oh, oversold. And then, I'm talking about trade the stochastics. It doesn't have to be perfect. Now, my criteria for the stochastics are a whole different thing. 1433. It's a standard one, and I use the standard because if the crowd is using the standard, most people are looking at it, you want to have that advantage. But there's other advantages. We have other indicators that we use to tie into the stochastics, and one of them is recognizable patterns using 1-2-3 patterns, the 1-2-3 method. Here was the news, Here was the news. It gapped us down, and we moved down 3 days. All of a sudden, it just comes out to Verifone or Starbucks making a deal with Square payment systems, and that hits Verifone, which is a payment system. So you can't predict that stuff. It doesn't mean that the system didn't work. It just means that you get hit with unknown news, and it's an opportunity more likely than anything, because this is what the market's about. It's about The market is being manipulated down to this level so they could trade to this level, so they could trade to this level. They want to trade this market. That's what you want to do. So again, so many different opportunities in the market, but it really comes down to recognizing the times you want to get into the market. All right, we did that on Verifone. We did that on PBR. The PBR, we didn't even go into that, but the PBR, we're waiting for that first really pullback on that first flag. And once that flag comes apparent, we'll trade that and we'll make money on that. I'm pretty sure about that. That's not an issue. Hess, we got that. Hess is a great example of the first pullback out of a base. We're just talking about a pullback out of a base. And another tip. I'm giving you 2 tips. Jesus. This is not good. Oh, look at this. What does this look like? PBR. Oh my God, is that the same freaking... Oh, excuse me. This is a family show. Look at this. I want to go back to the daily. Look at this daily chart here. Forget about all my little red lines because that's me predicting the action because that's what I do. But let's just... I have so many good setups on this week's watch list. Alright, so here's your PBR. You can see the difference between, you can see the inverted head and shoulders pattern. You see that left shoulder. You see that right shoulder. You see that head. Alright, you see that neckline. You see that break of the neckline. You see the downward channel. So this is really the change of trend is the inverted head and shoulders. The breakout is here. Now what were we just comparing this to? Hess? So Hess had the same thing, exactly the same thing. But we had the breakout of the, we had the breakout of the thing, and then we had the pullback, and then we had the breakout. So we're looking at that to continue. So you can see Hess now starting to trend up. And that's it. That's the key. That's the key to making money in the markets, people. Key to making money in the market is trade the stock you want to trade when you want to trade it. Don't get into anything. Don't feel like you need to make money every single day. Some days are going to be choppy days. Some days are just going to be weird. Sometimes there's going to be news involved in the stock. But wait for your time, pick your time, and make money. That's your second job right there. You could do this. I tell you, you could do this part-time. You probably could do this part-time. And part-time might be even better because it gives you less risk. It gives you a mental break, that you're working, you're bringing another money source. And it gives you the time. It doesn't force you to trade. You're not sitting in front of the computer. I always say that someone who has 2 jobs, trading not an issue. It's probably even in some cases better because of the just the lack of the time being in front of the computer screen and being able just to recognize a pattern and taking a higher probability setup when it happens. Put in a trend line stop in or something. If it did break down, hey, you break down, but you already took the trade on a pullback, so you already have a low risk trade here. So everything looks good. You see that channel, you trade out of it, end of the work week, you're like, oh, it's up $1. I think I'll take profits. You have a little extra bang for the buck, a little Saturday, Wait for the DayTraderRockStar watch list to come out again, and then, earn your extra money. Hess and PBR. All right, that's it. So we're just waiting for that next pullback in PBR. And, next time you see me do a video like this, it might be after this pulls back to here, and I just say, well, see what I mean? All right, I'm done. I think I talked too much. I'm really fired up tonight. We got a good watch list out. For those out there who might be just listening to this for the first time, because I branded it different, and you're like, wow, this is interesting. I thought this was a simple tip to make money. It is. How to make money trading stocks. All right, from DayTraderRockStar. I'll talk to you guys on Monday. DayTradingRadio.com.